Want to answer some of your questions you submitted in the Prime program. And also, don't forget that to access your materials, you can just go log in at drboyceprime.com, and that is where everything's in there. One thing I want to mention really quickly is I think you guys are gonna like this video. I just text you guys. If you get on the text list, text the word options to 87948. I just sent you a brief video that you can log in and take a look at, that basically shows you how to use your options portfolio to borrow money. So this can benefit you if you need to pull cash out of your portfolio. So with the example that I gave you, with literally an investment in certain stocks that I selected, that I showed you the example with, I think the investment would be about $24,000 or something like that. Maybe you did this with your family. You can pull out as much as $30,000, almost like borrowing from a bank, and then you can repay that. So text, make sure you get on the text list, text the word options to 87948, and log in at drboyceprime.com, and that's where the video is located. So the first question comes from Shaquana. Shaquana says, what are your thoughts about using Lyft to sell options? Well, if you log in at drboyceprime.com, you guys know that the moneymakers list is there. I don't think Lyft was on the moneymaker list. When I look at Lyft, I don't see that as a company that is really going to be good for generating income. Maybe it's a long-term investment if you believe that they can compete with Uber or something like that. But just eyeballing it really quickly, I'm not really a big fan of Lyft. So sorry, Shaquan. Was it Shauna or Shaquan? I'm sorry. I don't personally like Lyft, to be honest with you. But if you log into drboyceprime.com, you guys know about every 3 weeks, I update the list of money makers, and these are the stocks that generate the most income. And also, I show you guys my portfolio in terms of the assets that I'm invested in. Not investing advice, but it's stuff that can help you along. Let's see here. Is a roll up or roll down a good or bad thing to do, since I'm only trying to generate income on a weekly basis? Well, I would say that getting your income could involve roll-ups or roll downs. And if you log into Dr. Boyce Prime, I show you how to do all that. But also, sometimes people don't roll up or roll down at all. They just let their options expire and then buy it back. The problem, though, is that it does make things more complicated from a tax standpoint. So the roll-ups are designed primarily to prevent having a taxable event. Taxes tend to get paid when you exit the door, meaning that you sell the asset. So when you sell the asset, which is what happens when your stock goes into the money, and I know this week a lot of these stocks have done really well, so a lot of your calls might be, or your assets may be in the money. So that's where the roll-ups come into play. But the problem with roll-ups and roll-downs, roll-ups in particular, is that it costs money. It costs cash. So if you don't have a lot of cash available, then sometimes you can't roll up. Sometimes you have to do a partial roll up. You roll up maybe half the shares or something like that, so you can maintain that ownership. Also, the interesting thing that I've seen done is, if you look at that video that I show you guys, if you log into Dr. Boyce Prime, where you can borrow money against yourself, you can literally, and I've done this, is a little fun little trick that I noticed when I was messing with my own portfolio, is that you can pick one stock and sell a long-term equity anticipation option, push way out, deep strike price, take that extra cash, use that cash to roll up your other assets. I hope that makes sense. So you can then maintain ownership in the other assets by borrowing against one of the assets. So this is kind of how business is done. The way businesses and billionaires and millionaires make money is they borrow money and then they invest the money in another asset. So this is actually something you're able to do directly yourself within your own portfolio. So feel free to take a look at that. I think that's a great way to go. Let's see. So log in to drboyceprime.com. It's all right in there in your login. Let's see. Shauna says, if selling the call is to go on the money, I decide I want to keep it by rolling up or rolling down. Is that correct? Yeah, if you want to keep the shares, you do a roll up or roll down. Yeah, I think we established that in the last one. So I'll move to the next question. Let's see. The next question is, okay, also from Shauna. Do I still collect the premiums, whether it hits the strike price or below the strike price? Yeah, if it's below the strike price, if you're selling a call, then you do get the premium. But the premium is yours regardless. The premium is yours whether it hits the strike price or not. It's whether or not it hits the strike, that only matters to the extent of whether or not your shares are going to get called. If they get called, you can buy them right back, or you can do a roll up. It's not a loss to you. It just means somebody else got paid too, right? So I don't care if other people get paid, as long as I get, as long as I get my little cut. Let's see. I'm selling the stock where the price is 220. 222, and the strike is 225. The stop price is 229, so it's below the strike price. Actually, it's above the strike price. Should I let it expire? Is this correct? Yeah, you can let it expire and just take the cash, and you can reinvest the cash. So the times where you might want to let that happen, again, not investing advice, but the times I allow it to happen is when I either don't really want to own the stock as much. Maybe I want to let that stock go. The moneymaker grid changes every 3 weeks or so. So sometimes you'll see an asset that just looks really juicy, maybe a good pharmaceutical company where it's paying lots of money, and it then allows you to, and then you can take that money and reallocate it. But some of you like your portfolios to be subtle, and that's another approach. By the way, if we did open up the mastermind for applications, so if you have a decent sized capital base and you want to be more precise and you want to talk to me directly, have me look at what you have and show you what I have, things like that, then feel free to email support@theblackbusinessschool.com, and you can apply for the mastermind. The mastermind isn't for everybody; it's more so for those that really really need an advanced strategy, or maybe you have a lot of money at stake and you want to be really careful. So your capital base should be approaching 50,000 or above. But if that's of interest to you and you want to apply, just email support@theblackbusinessschool.com. They can show you how many seats are available. I think we might almost be filled up, but you can feel free to reach out. Okay, so Shauna, let's see here. Can you explain the pros and cons of using your own capital versus margin for cover calls? Yes. Remember, margin is debt. Debt is risk. If you take on that risk of taking on debt, that means that you just want to make sure you're ready for what that might entail. And so the thing about debt is that debt is beautiful when you're making money. Debt is wonderful when you're making money because you're leveraging, right? And leveraging, think of it like a slingshot. Leverage, I leverage, I pull way back, and then I go way out into the stratosphere. And people have gotten very rich off of debt. That's why I'm not anti-debt. But the thing about debt is that you got to be really careful, because if things go bad for you, then the debt can be a real burden. And so when the economy crashes, typically people that have the most debt end up getting their butts kicked. So with margin, I would just encourage you to be really careful. But margin's nice. I mean, if you have like literally a person that just has maybe about 15 grand that they can come up with, like say, through a loan or something, and they can leverage that with margin, you can make almost enough money to either quit your job or supplement your income very, very, at a very high level. I've seen this. I've seen people literally add an extra $20,000 or $30,000 a year to their income, which is better than waiting for your boss to give you a raise, by simply leveraging that income and then buying the right stocks, protecting your position like we do in class, and generating either weekly or monthly income. It's done all the time. I sat with a mom. Now, she didn't have, how much did she have? I think that she had about 50,000. And so we used margin, and by the time we were done, she had several $1,000s in extra income per month. She was ecstatic. So, and this is something that's easy to do. We do this, whenever we do the one-on-ones or the group sessions. So I would encourage you to just consider margin. I'm not telling you to do it, but margin is great. Access to capital, that's what it is. If you have access to capital, sometimes having access to capital can be more valuable than having even high income or wealth itself. So let me keep going here. Shauna, you mentioned, about borrowing from the 401k. Do you suggest getting a personal loan? Okay, I lost my job and the penalties. Yeah, okay, so you're talking about the penalties of withdrawing the 401k. Yeah, when you withdraw from your 401k early, the penalties are harsh, the taxes are harsh, and also you're really hampering your financial security. So I'm not a big fan, in my view, of using all your wealth toward the option strategy. This strategy is good for one good thing. It's good for generating income to pay bills, stuff like that. I would set, in my view, I'm not going to tell you what to do. It's not investing advice, but I separate my long-term wealth building portfolio from my income generating portfolio, where I'm dabbling with the options and all that. Also, I'm not a big buyer of options. I'm more of a seller. I like to sell the options because I want the income. I don't care about all the gambling and all that everybody does. I'm not a big gambler, but I like my income. So, so this the 401k can be utilized. I'm not a big fan of withdrawing everything if you can borrow against it. If you borrow against it and then there are monthly payments or something like that, well, guess what? Let's say you got 50K in your 401k. And so if I've got 50K, and let's say that I go and I've been studying in class and I know how to use my margin, and I go and I use my margin. So now I've got, let's say, 80K of investable capital. I could easily take that money and make far more than I would need to make those monthly payments. In fact, I would make enough income that I could pay off that loan in about 6 months or so, and then have an asset that is productive and making money for me forever. So literally, even if you use a simple stock like Coinbase, and I borrowed and got enough money to buy 200 shares of Coinbase, or not even 200 shares. Actually, if you borrow, say, 50K, you can actually get 400 shares, which is just freaking amazing. A person doing that strategy literally could make approximately, let me look here, 5 May, June. A person doing that strategy, oh wow, this is whew, this, I don't know, but I mean, I think this is the coolest thing in the world. A person doing that strategy literally can make an extra $5,000 a month. So literally you're making $60,000 a year staying at home. So imagine if you borrowed the 50K, and let's say that your monthly payment was, I don't know, $1,000 a month. Well, you're making an extra 5 grand a month because you did what we do in class. That's a no-brainer to me, especially if it either gives you enough money where you now have a massive financial cushion. I mean, that extra 4 or 5 thousand a month, I mean, that's a mortgage payment. Our house is a nice house. It's not a mansion or anything, but it's a nice house. Our mortgage is about 2,400, something like that. I don't know. So literally, you get a house twice as big as mine. Right? Like I just think that's the coolest thing in the world. So whether you quit your job or don't quit your job, you've got the thousands of dollars in extra income coming in, and I think it could make a big difference, especially for those of you that have stuff going on, kids in college, aging parents, whatever, right? So I would look into that, but I would be really careful not to disrupt the original capital base, because that's where you have your problems. Is if your capital base gets disrupted, then you're going to struggle in retirement. And remember, in America, there's a big retirement crisis on the way. Most Americans are not prepared for retirement. They're getting their butts kicked. They're not saved up. So I don't want you to be in that position. So I'm not a big fan of undermining the 401k, because also remember this. Don't forget, as excited as I am to show you stuff that can generate income, I never want you to forget that everything involves risk. Risk is always present. So that's why protecting your portfolio is really important. That's why being able to stomach the downturns is important. I knew a guy who started doing stuff like this in 2022 when the market was kind of ailing, and we didn't know this at the time, but the market dipped and he lost some money. And when he lost money, it freaked him out so much that he just stopped screwing with it. He walked away, and he totally missed the big upswing that happened in 2023. And I talked to him and I said, "What are you up to?" He said, "Well, I'm day trading." And I said, "I don't really like day trading that much. I'm not saying that it's terrible. I'm saying it's a much harder way to make money." And people that present day trading as if it's a great way to make money, I don't agree with that. I'm not saying it's bad. It's fun. It's like going to Vegas or something, but it's not something that is, in my view, a serious, meaningful long-term wealth building strategy. Even stuff that we love, like multifamily real estate and all that, is okay, but it involves a lot of work. It involves a lot of paperwork. It involves a lot of time, a lot of patience, and it also is highly illiquid. So I like this strategy because the ROI is higher. There's much less work required. It's simple. I can do it by myself. I don't have to involve a whole bunch of other people like tenants and all that stuff. And it's liquid. I can make that investment that I just described to you and be out of that investment by, 3 hours later, by this afternoon or something, and not miss a beat. So yeah, I don't think leveraging the 401k is a bad idea. I would just say be very, very careful. Whatever you do, just be really careful. All right. So Andrea, when I sell stock options, how long do I earn income? You earn income as long as you do it. I've been earning income on this for years. I've heard you say monthly. How many months? There's no particular time period. Remember, the beauty of options is that you can manipulate time. You can decide. You can sell time. You can buy time. That's the beauty of the financial markets, is that in the financial markets, one good thing, scholars are not perfect and we don't do everything right. We make a lot of mistakes, but one thing that we have been able to do is through high level mathematics, they've been able to engage in the beautiful act of quantifying time. They can tell you how much time costs. It's freaky, right? So it is the ability to sell time. So you have this asset that doesn't. So the thing about an asset is an asset, a financial asset is a multidimensional kind of thing. This is why I love doing financial consciousness training and us doing sort of our economic awareness, because I want you to see the various dimensions of money, right? So basically, I have this share stock. The stock isn't just what it is right in front of you, right? That company a big part of that company's valuation is all the things that company can become. So it's almost, it reminds me of quantum computing. I know it sounds deep and I sound like a hippie right now, but bear with me. But literally, it's like if somebody gives birth to a newborn baby, some people just look at the baby and they just see a baby. Other people look at the baby and they see everything the baby is going to be for the next 80 years, all the baby's kids, all the baby's grandkids, all the baby's great grandkids. So if you take away the baby, you're not just taking away the child, you're taking away the whole future of that child. Does that make sense? I hope that makes sense. So effectively, stocks and options are beautiful because they quantify mathematically what's the value of the potential of this thing. How much should I pay to get greater access to not just what that thing is, but what that thing can become? And that's what allows you to borrow from yourself. You can sell time, you can sell space. And so if you log in at drboyceprime.com, I put that video in there. And I'm texting it out to you guys tomorrow afternoon. So just make sure you're on the text list. Text options to 87948, and you'll get a link to the video. And I think you're gonna like it. I really do. All right. So anyway, let me keep going here. It's my anniversary, so I don't want to be too much of a workaholic on the day I got married. All right. So let's see here. Sal says if you're writing weekly, bi-weekly sell options and buy a 6-month protected put for the stock, but the underlying stock drops 20 to 40% of the value, what is your strategy? So remember, your puts are your insurance. So if the stock drops a lot, the question I ask myself is this still a productive asset? Does this asset still allow me to make money? If the answer is yes, then sometimes I don't do anything. Sometimes I just let my puts sit there and I just keep on making my money. It's like if I own a building and the value of the building drops by 20%, but if I'm getting rent from my tenants in the building, what do I care that the building value dropped? I'm not going to sell it, and my tenants are still paying their rent. So, remember, sometimes the price of an asset drops not because the quality of the asset drops. Sometimes the price of an asset drops because the market changes. Something happens in the market that has nothing to do with the value of your asset. It's just it dropped because it's everything's kind of relative and comparative. So, long story short, if nothing changes, then I don't worry about it. Now, here's what happens though: if I get to the point where either A, the stock has lost its ability to generate income, I might make an adjustment. I might pull my money and reinvest somewhere else. My puts kick in, I cash that in, I take the money, I go somewhere else. I move to somewhere else. Or I can roll down my puts and just reset my stock, right? I can do that. And that generates cash flow to help me deal with margin calls so that I can then have the ability to continue making money from the stock, just maybe making less money. So I've kind of accepted the idea that I still have a business. It's just not as lucrative as it was before. That's business. That's how business works, folks. Sometimes you're making a lot of money, sometimes you're not, but you're still in business the entire time. What else? I could sell a put. I could just cash it in, like you cash in. People talk about selling these cash value life insurance policies. Well, the beauty of puts is that they're better than a cash value life insurance policy, because if you've seen cash value life insurance policies, they take like years and years, sometimes decades, to really be worth any significant amount of money. So like I look at those charts and I'm like, so you're telling me that when I'm 90, I'm gonna have all this money? That's great, but I'm gonna be so tired, so old. I may not even know what money is anymore. But so instead, this is the kind of a cash value life insurance policy that can kick in a week or two. But the thing is, remember, when you buy insurance, you're hoping that your insurance expires worthless. You don't want your insurance to be um, the thing that sustains you, because remember, that means you've taken a hit. That means things have gone bad. But the insurance is a cushion. It's kind of like a mattress at the bottom of the building, where so if you fall out the building, you're still going to fall. You're still going to hurt your back, but you got a cushion. You got a trampoline to catch you. You see what I mean? That's kind of how the puts kind of work. All right. So Danny says, if I needed cash right now, does it make sense to buy stock and sell calls lower than the current stock price? Are puts needed? Well, I think puts are always a good thing, especially when we talk about a volatile asset. But I do get that selling in the money. Call options is a way of kind of selling the stock without really selling the stock, right? So you're generating income and you're going deep into the money in order to generate more income because maybe you have some short-term capital needs. That's beautiful. That's the flexibility of the stock. The challenge, though, is that your ability to extract that time value in the asset. Remember, we broke down the value of a stock option premium into time value and intrinsic value. So the more you dig into the in the money side of a stock, the more you're digging into that intrinsic value. It's almost like you're not selling the fat anymore. You're starting to sell the muscle. So just be thoughtful about that. But sometimes if I want to get rid of a stock, I'll sell a deep in the money call just because I expect to sell it anyway. So I want it to expire in the money so that I can give the stock away and let someone buy it from me and move on with my life. So it's okay to do that. You just got to make sure you know what you're doing. All right. So last, Danny says, how do you protect your long-term portfolio? Puts, absolutely. Puts are a great way to protect things. I did a training that you guys can feel free to take a look at called Stormproof Investing. If you go to stormproofinvesting.com, I show you 7 strategies you can use to protect your portfolio using all different kinds of tools and in ways of kind of viewing things that I've kind of done. So feel free to go take a look at stormproofinvesting.com, or also if you log in at drboyceprime.com, there's plenty of stuff in there as well. All right, so let's see. Last question. Ishmael says, I've admired your work. Thank you, Ishmael. I appreciate that. For 5 years, I followed you and Dr. Claude Anderson in your examples. You buy your puts for 6 months. Why do you do this? Also, will I be selling options on the stock for 6 months because of that choice? Yeah, you know what? I picked 6 months because it's easier to teach a topic if you're very specific on certain things. But truth be told, it doesn't have to be 6 months. Once you get comfortable and you understand what's going on, you can protect your portfolio for 2 weeks. You can protect it for 2 years. You can protect it for as long as you want. It's really a personal decision, right? So I use 6 months in class, but that's not because there's a rule. It's just because I just make the rules and make it simple so you guys can understand what we're doing. So anyway, that's it. I hope that this helps answer your questions. Make sure you're on the text list. Text the word options to 87948. You have to log in, but I'll send you a link to the video I did on how to borrow $20,000 from yourself if you want to using stock options. It's pretty cool. I don't think anybody's ever shown this to you before. I think you guys are going to really love this. Also, I'll be reaching out to you soon for another Prime class. And also, I'll text you guys a link to join the VIP session. We're doing a small group session for those of you that want a little bit more special attention. Last but not least, if you have a capital base, if you've hit 50K and you feel comfortable with options and you want to go deeper, more advanced, or you have a lot more at stake, or you want to be part of the private mastermind, it does have a higher price point. But if you want to apply, you can reach out to support@theblackbusinessschool.com. That's support@theblackbusinessschool.com. All right, guys, I'm out of here. Have a good day, and I'll see you guys soon. Take care now. Bye-bye.